Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody had a very beautiful day of trading. And in today's markets, guys, well, I think you know what I'm going to say. The bulls continue their absolute complete domination of this market. It is now the 6th day in a row that we have set new all-time highs every single day on the S&P 500. And in terms of the year so far, guys, it is now the 37th time this year that the S&P 500 has put in a new all-time high. Very strong market, and the market is getting a bit more broad as well. However, this does raise some concerns that I've been seeing all over Twitter and other forums as well of whether or not this market is actually in a bubble, whether or not this is sustainable right now. So in today's video, guys, we're going to take a look at a few of those concerns, and completely normal concerns, guys. These are some of the best quarters back to back, the last 2 quarters in terms of the pace of the gains pretty much since the month of October that we've ever seen in these markets. Only bested pretty much by 2001 and 2021, which was also a record year. So we're definitely in for a year for the record books, that's for sure. But it always raises the concerns whether or not we're in a bubble. So in today's video, guys, the first couple of minutes of the video will be to address those bubble concerns. Have we ran too much? Or is there potentially more on the table to gain? We're going to take a look at that very, very briefly. Thereafter, we're going to take a look at our major technical analysis rundown of our major indexes and gauge whether or not the market rotation continues to be healthy, even despite pushing these new all-time highs. And lastly, guys, we're going to take a look at our big tech names and see whether or not there's some deals available on our Magnificent 7 names as well. And finally, guys, we are going to conclude with a slight glimpse into my portfolio and a few more swing trade ideas building upon yesterday's list. So without further ado, guys, a lot to cover today. Let's get right into it. So SPY up a very healthy 1% on the day. QQQ up about 1.04%, just a bit higher than that. Very nice day overall in the markets. And the rotation across all of your sectors was very good today here, guys. Take a look at your heat map, almost everything in the green. These are the types of days that I like to see, where we really have broad market participation, no real sector getting left behind. Only 2 names down here, your infamous credit card issuers, right? Visa and MasterCard still unfortunately red. Still a very juicy buying opportunity, however, in my opinion. The rest of the market doing very well. Everything from the bottom half of the market, industrials, real estate, utility, all those doing fantastic. Healthcare and financials holding their own, and big tech having a heck of a nice day as well, especially semiconductors, NVIDIA and AMD continuing to push up further. Now, moving on to the 1 day, guys, you can see how broad this market was today. Nothing left behind at all. Technology in the lead, over 1.5% for them, but everything else in the green. Very fantastic breadth in the market today. And now on your 1 week, guys, looking a lot better, and on the 1 month as well. Almost everything on the 1 week relative now very broad, except for energy pushing to the upside. And on the 1 month relative, after today's performance, suffice to say, everything except for industrials now in the green over a 1 month performance. So your market breadth is definitely improving. And you can take a look at these 2 following charts for that, guys. This is the ticker MMFI. If ever you guys want to save this on a watch list, percentage of stocks above their 50-day average. We were having a little bit of concerns here a couple of weeks ago. This is a weekly chart. A couple of weeks ago, guys, the markets were pushing all-time highs, but the breadth, the amount of stocks that were above their 50-day moving average was not that high, sitting around a 35%. So there was definitely a little bit of divergence there, right? Big tech was really carrying the market, but now we can see it's up to about 45%. So the market is broadening out, and that's the point that I've been trying to make here, running across these graphs over the last couple of days. The market breadth is improving, but still, we're towards the lows that we had last April, last fall, which was the big sell-off in October 2023, and even last March during the banking crisis. So still towards the lower end of the levels, guys. Usually when you see markets at all-time highs, we technically should be all the way up here, but we're not. Just goes to show, guys, that the market can still push a little bit higher. Now, I also wanted to run you guys through a little bit of slides real quick. So here's the amount of times the S&P 500 has posted gains in prior years. You remember that I said that we hit it for the 37th time this year. You may think that's a high number, and it is. However, there are years in the past, going all the way back to about 1957, where this has been the case, guys. The S&P 500 can do this. You can see many instances in history where it has been over 40 in terms of a number of different years, right? Usually the median median point, the average is anywhere between 25 and 35, but there are a few outlier years, especially in the last decade, right? You can see it here, 2013, 2014, 2017 right there, and also 2021, putting in some very high reads above the 40 mark. So yes, we are delving into record territory at the 37th time, but nowhere near some of the highs that we've previously had in these markets. Now, couple that with the fact, guys, a lot of questions about the S&P 500 PE ratio. Are we too high? Are we in bubble territory? Well, take a look here, guys. The S&P 500 PE ratio is sitting about a 29.09, which is well above the median, right? So the median is usually about 17.9, right? So fairly low median, which is not the average. It's really just the median, right? But you can see here over the last at least 10 years, the average has been about 24.16. This 17.9 is your long-term average, right? All the way laying back since pretty much the inception of these markets back in the 1930s. However, now in the past 10 years, if we look with the heightened valuations that we're getting with a lot of new tech players in the game right now, the average is about 24.16. So yes, we are a little bit high in terms of our last 10-year average, but you can see 2021, when it really got out of control, even though we are at a higher high than back then, the PE ratio back here was pretty poor indeed. And if you want to take this back, guys, on a 20-year range, you can see, yes, we are a bit high, nowhere close to 2021. We're at the higher end of the past 10 years here, guys. But obviously, this is the recession. This was a little bit of an anomaly, right? When the markets, basically EPS was dropping a lot faster than the market was dropping, which is why you see a heck of an anomaly right here. So we won't really look at this one, however. But if you take a look at pretty much all the past history that we have on this chart since the 1970s, you can see that the long-term average since the 1970s is about a 20. So are we overvalued? Yes. But is it getting a bit too crazy right now? Not really. We're still within one standard deviation of pretty much your longer term average stemming back from 1971. So not that bad. Are we a bit rich? Yes. But egregiously rich, bubble territory? Definitely not, guys. These are the ones you need to look out for. 2001, the S&P 500 PE ratio on a trailing basis was 46, very high. The NASDAQ was in the hundreds at that point. And even 2021, right? We got all the way as high as 40. So still a little bit of room to move on the S&P 500. And keep in mind, EPS on the S&P 500 is growing about 9% per year. So on a forward basis, this PE ratio is only about a 27 for next year. Still a little bit high, but nothing egregious just yet. Now, take into consideration this as well, the push and pull of US earnings. A lot of the concerns has been that most of your earnings have been coming from big tech. So we have some research here by RBC Markets, which was done pretty much in the month of May. So not too long ago, just a couple of months ago at this point. After lagging for many quarters, EPS growth is finally outpacing revenue growth. This is true. We went through a little bit of an asset recession and a corporate recession during 2022 and early 2023. Nice to see that EPS on a broad based in terms of the market is finally higher than revenue growth. So it means companies are generating more profit and EPS is going even higher. That is a very good thing. Now, can the Magnificent Seven stay magnificent? Take a look at their annual EPS growth. It is expected to slow. Very high 2023, decent in 2024, but in 2025, going to be reverting to more traditional metrics associated with big tech. Anywhere between 12 to about 16% is your long-term average. So they will be reverting to the mean, which leads to the question, well, who is going to be giving the S&P 500 and the QQQ their record performance? Well, everything else. Take a look at this. The Magnificent Seven's EPS growth advantage over the rest of the S&P 500 is expected to fade. Take a look here, right? Outperforming S&P 500 was outperforming the Mag 7 in 2023 when they were getting crushed. 2024 has been all about the Mag 7. I completely agree with you. And you can see dark blue is the S&P 500. Or the S&P 500 with the Mag 7, and this is without the Mag 7, which is the dark gray category right here. So you can see Mag 7 gains in the S&P 500 far outpacing anything without the Mag 7, of course, but that is set to kind of taper off and fade. You can see next year, the difference is not so much. Once again, guys, it goes to show that the market is currently broadening out. People are playing it safe right now. A lot of money is going to your Mag 7 names just because they have the most cash in the world right now, and that is usually where money goes, especially in equities. People don't want to be taking much risk, but there's a whole bunch of other sectors that really haven't ran that much. Think of financials still lagging slightly behind. Think of consumer cyclicals right here. Other than Amazon and Tesla recently, the rest of everything is fairly priced. Consumer defensives as well haven't done that amazing. Even things like industrials, real estate, and utilities, which are tied to interest rate performance, they too have not done quite well. So if we can get more broadening out of this market when interest rates come down, it should do wonders for easing everybody's concerns about over concentration and a bubble led by these names right here, right? We did the evaluations and the analysis on all of the Mag 7 companies just a few weeks ago. And suffice it to say, guys, other than Apple, everything is not too overvalued. Are they slightly a little bit rich? Yes, but are we talking like 2001 or even 2021 levels? Absolutely not. So still a decent amount of room to move to the upside on these markets, in my humble opinion. So hopefully that was helpful. Now, let's move into our technical analysis, shall we? And as I keep saying, guys, not much has really changed. We were keeping an eye yesterday on whether or not we were going to lose this hourly trend into today, right? We were calling for a break of yesterday's lows, and that would have been synonymous loss of the hourly uptrend and into daily consolidation, curling over like this. But we never lost the lower time frames, guys. The bulls just said nope and continued giving us another leg higher. So now at this point, we have to be concerned a little bit because our daily RSI is getting even above the level where we were back here when I was saying look out for a little bit of downside consolidation or sideways consolidation to cool off the RSI. Now we are pretty much at the same point. 80 on the daily RSI. Where do we usually get to 80? Well, you can see it once back in last December, led to a little bit of sideways and downside consolidation, more sideways, and then we really continued gaining the levels, right? Doesn't mean we need to have necessarily a very big sell-off, but could just be a little bit of a sell-off or a little bit of consolidation, which could be on the horizon, right? Take a look here again, back in last June, you see it again, right? Little bit of a dip, and then the market just continues in more manageable RSI levels, and we can even pull it back one more edition, which was November of 2021. That as well marked a temporary top of the market, dipped a little bit, and then put in a little bit more gains before we then got a very deep asset crush because of high inflation, the onslaught of the war against Russia and Ukraine, and a number of different things were happening, but that was a different time, guys. The markets are a lot better, in my opinion, right now. So a little bit high, could be expecting a little bit of a pullback, but as I said, guys, the bulls have tons of space. Daily uptrend, anything pretty much above 542 on a pullback, going to be looking for a daily higher low for further trend continuation. Target the 12 EMA at this point and the previous resistance, which is now support, and that's all starting at about 550 down to about 548. A little bit of maybe of a touch and go. Obviously, tomorrow, guys, we have a very big day tomorrow, CPI, and CPI is supposed to come in at about 3.1%, which is one of the lowest reads we've gotten if it does come out like that in the last 6-7 months. So looking forward to that. Not expecting any nasty surprises as well. And then even on Friday, guys, big day on Friday too. Friday, we obviously have the bank earnings. Apologies for losing the page right there. Friday, have some bank earnings, right? JP Morgan, Wells Fargo, Citi, and Bank of New York Mellon. So if ever those two events are negative catalysts for the market, you guys know the bulls have tons and tons of space. And even if that leads us into a little bit more daily downtrend cycle and weekly consolidation, you know on the weekly, tons of space as well. Anything about 518.50, looking for a weekly higher low for further trend continuation. So looking very strong, guys. No red flags, but we'll keep an eye on that data tomorrow and on bank earnings on Friday. Moving on to the QQQs now. QQQs just continue pushing higher, guys. Even on the QQQs, we are approaching quite overbought territory right now, roughly at about 80, and the same analysis applies, right? When we hit 80 back here, we had a little bit of correction here for about a week and a half, not losing too much, just moving sideways, and then gave us another leg higher. So I'm kind of expecting the same thing, right? Whenever we hit 80 on the QQQs, you can see it doesn't happen that often. I have to go all the way back pretty much to 2021 to find events like this. You can see it right here, big move to the upside, and then we had some pretty big consolidation to the downside in the month of September, right? Before continuing on the market rally over the next few months. And obviously we did have another event like that back here in early 2020 before the pandemic actually happened. So you can see what happened there. Normal price action movement, hit 80, a little bit of consolidation, and just continues pushing higher, guys. Hit 80 once again, downside consolidation, and the market continues. So every time it hits a high RSI, it doesn't necessarily mean we're expecting an absolute flush on these markets. It could just be some very slight downside consolidation or even some sideways action, which would be the best case scenario for the markets. Daily uptrend, looking for a daily higher low as soon as this tops out. How will you know it tops out? Once again, watch for the loss of the hourly time frame and the loss of this 12 EMA, which has been providing support for now the last 7 days of trading. So whenever that happens, guys, expect to look for a higher low, anything pretty much above 476.75, looking for that daily higher low for the eventual further trend continuation, guys. One thing's for sure, what days like this and weeks like this and rallies like this since the month of April definitely tells me, guys, especially if you feel that you've missed out on it and whatnot, it's all about portfolio construction, right? So on the channel, obviously, I do a lot of trading because I'm trying to teach everybody that it's really easy to trade. You don't really need 8+ hours a day in front of your screen to put on some very decent trades and outperform the market. However, the main thing that I always say on the channel, maybe I don't say it enough, maybe I should start saying it more often, is the importance of having a long-term, no-touch portfolio to which you only ever dollar cost average as a byproduct of putting money aside from your income or salary, right? 10, 15% per month you should be putting away and putting into a long-term, no-touch portfolio. And I'm a big fan, guys. I don't talk about doing indexes that often, but my larger, a larger term portfolio can be constructed by maybe having 60, 70% in just broad-based ETFs like the S&P 500, the QQQ, or any mix that you truly want. And then you can maybe have 20, 30% of individual names with which you look to outperform the market, only high-quality companies. But the importance of a long-term portfolio leaves you, or rather gives you the opportunity to benefit from these tremendous rallies without ever feeling FOMO, without ever feeling that you've missed out whatsoever, right? And, just leads to having market performance that's in line with the overall indexes. So the stress of a long-term portfolio, guys, you need to have a long-term portfolio. I myself have a long-term portfolio too. I don't really show it on the channel that much because it just sits there and does nothing. I literally have the same 12 companies that I've had for the past 5, 6, 7, 10 years at this point. And then I also have a little bit of index allocation too, and nothing ever changes, right? Just add to it and add to it and add to it, and it goes higher. The trading account is obviously what I showcase on the channel because it gives more concepts about how to invest, how to build positions, and how to use options to swing trade as well. But the importance of having a long-term portfolio, guys, is so crucial if you want to just not feel left out when the market goes on ridiculous, record-breaking rallies like this. So moving on to the XLF financials right now. Financials performing very, very well as well. Daily uptrend now finally looks like it's trying to get some legs. Still looking for that break of yesterday's high. Daily uptrend, though, is still underway, and we're really breaking out of this section of consolidation we've been trapped in for pretty much the past 2-3 months at this point, right? Looking very good above the moving averages right now. So as soon as this move is topped out, going to be looking for a daily higher low. At this point, anything above 41.4, going to be looking for that daily higher low for further trend continuation. Now we come above this most recent shelf of resistance. That's now going to be beautiful support for the bulls. And the moving average is going to act as support as well, looking extremely strong. But once again, guys, as I said yesterday, all of that is predicated on good bank earnings on Friday and for some recovery rallies in Visa and MasterCard because they do represent a decent weighting within the XLF index. It can't really start making leaps and bounds without those credit card issuers, right? So that is just a little bit of analysis on XLF. And the weekly trend is looking quite good for this weekly breakout continuation above our box of congestion. That is pretty much our previous all-time high resistance. So XLF looking quite good. Now moving on to XLV Healthcare. XLV Healthcare finally putting together a monster day of rally, 1% to the upside, looking very good. Daily downtrend, now looking to get almost completely engulfed by the bulls. Look at the size of this retracement, right? Almost an 80% rally back by the bulls, which gives them the best opportunity that whenever this move higher is topped out, we can set a daily higher low and reset the daily uptrend because we were in a daily downtrend, right? So now we need to reset it to the upside, and it looks like the bulls have created enough space to actually do that. If we were to lose this from here, we have some great support levels below us, guys. This yellow line right here at about 144.70, which is pretty much the confluence of your moving averages as well. So a little bit of a retest and run like this could definitely be in the cards before retesting our obvious resistance up here at about 147. The weekly is also looking very good after some somewhat sideways consolidation, pretty much looking for that weekly trend breakout and potentially retesting the all-time highs at about 148, looking very good on the weekly. And the monthly time frame looks gorgeous, guys, for some continuation in the second half of 2024. Once again, my favorite play in healthcare right now has to be AbbVie. AbbVie trying to do the same thing as the index. Gorgeous monthly prior resistance, newfound support, beautiful monthly uptrend, just looking for that continuation. So definitely a juicy dip buying opportunity on AbbVie, and I have been playing this one myself. Now moving on to semiconductors. So semiconductors setting a new all-time high on SMH today. Again, monster day for them, 2.35% the upside, looking extremely strong. Daily uptrend is nice. As soon as this move has topped out, how do you know that a move is topped out or bottomed out if we're going to the downside, right? Watch for the shift in the hourly trend. This right here is not an hourly downtrend, right? They need to set the lower high into lower low. As a matter of fact, that's what we were watching in today's trade, whether or not they were going to do that and go into daily consolidation. But as you can see, the bulls said absolutely no chance today and literally just moved higher. So the hourly time frame should be your guide for short-term movements. In terms of the daily, however, guys, as soon as this tops out and pulls back, we have so much space, guys. Anything above 255, looking for that daily higher low for further trend continuation. I'd be targeting the 12 EMA, which is going to curl up into this location right here. Could be a nice little swing trade opportunity, 270, if you're looking for that eventual trend continuation. A little bit high for me to chase it up here, however, and the weekly is looking absolutely gorgeous for that weekly trend continuation. No red flags on the market yet, guys. It's up to the bears to prove to us that they want to pull back these markets hard, and that's only going to happen if they can finally set up the daily downtrend. They had an opportunity here and they completely fumbled it, right? So until you don't see a daily downtrend, we are not going to go for some extended weekly consolidation. That's just how price action works. Now moving on to IWM. The Russell, so the small caps, right? Small caps, although they did have a nice day, about 1% to the upside, nothing really getting left behind today, still kind of trapped in this tightening range right here. At least we are now above the moving averages again, looking to attack this level right here, 204.53. Give me a breakout of that. Daily uptrend is reconfirmed, and then we can maybe talk about the weeklies expansion into the higher 208.80, but we need to get above this level first, guys. If we just continue teetering around here, it's really anybody's guess. The risk on trade is not that popular with Wall Street still today. So that is just pretty much what we're looking for on the Russell. And conversely, if we break this level to the downside, 200 psychological to the downside, daily downtrend would be underway. And unfortunately, we may just be looking at the continuation of this weekly move to the downside. We will look to 197.61 to act as our last line of defense for that. And if ever we lose that as part of broader market consolidation, you guys know I've been saying it for a while now, 193 to 190 is where I would look to pick up a bit of the Russell. Moving on to the Dow Jones now. Dow Jones finally with the break we've been looking for here, guys, for the past 2 weeks, looking very, very solid. Daily uptrend now healthily in motion as well. And the bulls are in complete control of this one, guys. Look how they smashed the hourly time frame. So going to maybe be looking for a little bit of a pullback into tomorrow and into higher highs. Looking extremely strong. However, this was a break of 39,500, which we've been asking for kindly for the bulls to do for the last 2 weeks of trading. So nice to see that they finally did it. If ever this move tops out soon, and where can we potentially top out here, guys? Well, 40,000, right? 40,000 is your prior all-time high range. So the bulls may just get rejected there. If they do get rejected there, they have tons of space now at this point. Anything above 39,100, just going to be looking for a little bit of a retest maybe of the prior highs right here. This same 39,500 could be a nice little retest and run blasting through the all-time highs. On the weekly, the Dow Jones is looking very, very strong too. Just looking for this continuation of the trend expansion. Once again, they need to break and close above 40,000 for this weekly uptrend to really be back into pretty much leg number 2 after having lost it right here, right? So looking pretty good on the Dow Jones. No red flags. Happy to see the bulls finally following through. And that's just a byproduct, guys, of a broad market recovery. Now, moving on to our big tech names, shall we? So moving on to Apple. Apple, this thing is maybe even going to like 250 this year, guys. I would not be surprised. Apple has had a tremendous rally. You're talking from the bottoms that we had. It seems as though not so long ago, right? We were trading the heck out of Apple in the 180s to 170s. And since then, Apple has been on an absolute monster of a tear, up 41%. Usually Apple does not move like this. And when it does, guys, it has to be notable to us, right? It is a larger upgrade cycle at play. Apple's new AI capabilities that they're going to be putting on their phones, laptops, everything pretty much is going to do wonders for that revenue expansion. Revenue has been roughly flat for Apple for the past 5-6 quarters in a row. So they really needed this one. And the market is responding in tandem with that, right? So daily uptrend continues to be an absolute monster. Just keep an eye, guys. We are overbought conditions on pretty much everything right now. Daily overbought conditions, 4-hour overbought conditions, and even 1-hour overbought conditions. So it's a question of time before Apple has a pullback. Just keep an eye, guys. 12 EMA should be your guide. We need to lose the 12 EMA with a loss of the hourly trend as well to be sure that daily consolidation is going to be underway for more than just one day, right? So that being said, so much space for the bulls now. Anything above 210 when we get a pullback, just gonna be looking for that daily higher low for further trend continuation. Now, if ever Apple has ran a little bit too much and needs to pull back for some more, let's say they need to set a daily downtrend for further consolidation on the weekly, guys, tons of space, anything above 206.35, looking for that weekly higher low for the further trend continuation. I will still be patiently waiting for Apple. Maybe I'll be waiting forever, but I'm still patiently waiting around 220 for the next swing trade on Apple. It's just where I prefer the stock the most. At this point, guys, I'm not going to chase it. Now, moving on to AMD. AMD is also performing very, very good today. Another 4% to the upside and getting rejected by the second area that we were keeping an eye on, right? The first level was right here, 175. We smashed it, and now we're at the top end of the range, which is about that 185. Same level as back here, same level as back here in April as well. And once again, proving to be a little bit of resistance for the bulls. You can see we pulled up into it and rejected quite hard. That being said, we're still in a beautiful hourly uptrend, never losing the hourly uptrend, right? So we could just make a second attempt at it in the next few days of trading. AMD looking very, very gorgeous. The bulls in short-term control of these timeframes. No reason that we can't really break above this level in the next few days of trading, right? However, if we get rejected on tomorrow's session, let's say CPI is bad and it pulls down the entire market, and we get a break of this level right here, 181.38, then that's hourly downtrend. Then we will look out for potential further daily consolidation. Where could we maybe consolidate to here, guys? Well, I'm going to be optimistic about recapturing this level, guys, but we may just not get there. Let me just move it up a little bit, right? So this whole area, 173 down to about 170, this little pocket right here, if we can get a retest, this is your prior area of resistance. I could pull these lines back and you'll see that they're right in line with the bottom of this range right here. So if ever we pull back into this area, which was previous resistance, newfound support, 12 EMA is going to be curling up into there as well. If we pull back, perfect spot, guys, for the potential retest area and maybe a second attempt at that 185. I will be looking to write short puts in this area over the next few weeks of trading. I already have long side exposure for AMD. So if ever AMD continues its monstrous rally all the way up to $200, I'm fine with it. But if ever we pull back a little bit more, I'm also fine with that too. And I will be looking for this area for a nice little swing trade. Daily looking very, very strong. And that weekly trend expansion is looking very, very strong as well. Congratulations to all AMD bulls who have been pretty much buying the heck out of the dips down here on the company. Now moving on to Amazon. Give me another quick second. And let's do Amazon. So Amazon also looking fairly strong here today, right? Just consolidation at the top for the past 5 days of trading. No red flags whatsoever. Just very, very healthy tightening range at the top. And this is pretty much a classic bull flag here, guys, right? Beautiful, beautiful, beautiful bull flag in formation right now, which does leave us to believe, guys, that if CPI is bullish tomorrow and the market continues, S&P and the QQQs continue, I really do believe that this is going to be Amazon's ability or opportunity rather to break above and close above that 200. You can see, guys, it's been struggling to close above that 200 psychological level resistance. Just a matter of time, however, in my opinion. The bulls looking very, very strong. Look how tight this hourly range is pretty much, right? Very, very choppy price action, but extremely tight. Just a $2 range for pretty much the last week of trading at this point. So it goes to show that Amazon bulls are extremely, extremely strong, buying any and all dips. And there might just not be enough sellers up here to hold back the price forever, right? Jeff Bezos is one of the major sellers up here, but he won't be able to hold this one back forever, looking extremely strong. And if for every which reason Amazon breaks down here, guys, and sets a little bit of a daily downtrend, you guys need to understand that on the weekly, there's so much space, anything above 174, just looking for that weekly higher low for the further trend continuation. So I'm good either way, guys. I have Amazon exposure. If it continues pushing, perfect. We're exposed. If ever it pulls back, I will be looking to play a pullback, 190 to about 189, retest of your prior weekly resistance, newfound support, and the 12 EMA on the weekly is right there as well. Could be a gorgeous trend continuation trade in my opinion. Moving on to Google right now. Google 1.17% to the upside. Google is just so darn strong, guys. Looking very, very good. New daily uptrend in motion as well. Daily higher low is pretty close, however, 189.61. If ever we lose that, lose the daily uptrend, and we may just be in for a little bit of weekly consolidation. But so much space here, guys. As I was saying with Amazon too, the bulls have so much space at this current time in all markets or in all these big tech names, right? Especially on the higher time frames like the weekly. So in the event that Google loses this area, pulls back a bit more, loses that daily 12 EMA, and we go into a little bit of weekly consolidation, guys. No problem at all. Anything above 171, looking for a weekly higher low for further trend continuation. And one thing's for sure, if we get anywhere close, 182, 180, that's where I'm going to be looking to play a little bit more as a swing trade on Google as well. Now, moving into Meta. So Meta doing a good job just holding the highs right here, holding the gains from Friday, not giving back too much over the last 3 days of trading. Where are they holding, guys? They're holding above our prior all-time highs. So it has to be notable to us, guys, that all of this previous resistance that we've struggled with in the past now is going to be very large support for the bulls. So daily uptrend is looking extremely healthy, still hunting for the daily higher low right now. Anything above 493.50, just looking for that daily higher low for the eventual trend continuation. We can come back all the way down here, guys. 520, 518, and still the bulls would be relatively healthy for that trend continuation. Looking very solid on Meta, nothing bad to say. Even on the weekly here, guys, gorgeous weekly uptrend. Would not be surprised if this one just continues running. And the next target, guys, is obviously going to be the 550 psychological area, not too far above the share price right now. Meta not with earnings soon, only on Wednesday, the 31st of July. So they could continue to benefit from a little bit of rally into earnings. We will keep watching this one day at a time, but you guys know I have a few swing trades in place on Meta since these lower levels, and I'm just holding them. Now, moving on to Microsoft. Microsoft also very healthy day, recapturing a lot of their losses yesterday, right? Pretty much equal of their losses yesterday, 1.44% of the downside yesterday, and 1.46% up today. So pretty much erasing yesterday's losses. Microsoft can't even get 2 days worth of consolidation in a row. They had the hourly downtrend, but the bulls put a stop to it today and pretty much said, nope, we're setting the daily higher low right away and moving on for a potential further trend continuation. So daily uptrend extremely healthy on Microsoft right now. Daily higher low is set. Now looking to move on. If ever we fail these all-time highs and break lower than yesterday's low, 458, that would be a daily confirmed downtrend. Then we would just zoom out to the weekly and look for a little bit of weekly consolidation. So much space on the weekly. Anything above 406, just looking for that weekly higher low for further trend continuation. My sweet spot on Microsoft, I'm not going to chase it up here, but if we do revisit maybe 440 down to about 435, that's where I'm looking to make a little bit of a swing trade here on Microsoft for the second half of the year expansion. So that's just a gorgeous, gorgeous stock, guys. Can't get too much of a pullback on Microsoft, right? I'm very happy that I played it during the whole time that it was back here, pretty much from February all the way through May. But at this point, chasing it here is a little bit of a risky endeavor in terms of the risk reward not being too favorable. Moving on to Netflix right now. So Netflix still struggling a little bit today, 1.18%. It just does not want to break these all-time highs prior to the earnings, right? So Netflix with earnings pretty much next Thursday, right? So not too many days left of trading for them. That being said, the trend is still healthy. Daily uptrend still in motion, looking for the daily higher low. Anything above 665.51, still looking for that daily higher low for the trend continuation. But if ever Netflix loses the daily uptrend and sets a little bit of daily downtrend into earnings, guys, just understand we are very, very close on the weekly, guys. The weekly higher lows are very, very close, 663. And if we lose this, weekly downtrend would be in motion as well, which means that monthly consolidation is underway. Where we could potentially pull back to on Netflix, guys, maybe after earnings. If earnings is not well received, usually Netflix moves about 7-8% for earnings. And this green box is literally within that range, talking about 630 all the way down to about 610, right? So if we do get larger form consolidation because of an earnings drop on Netflix and lose the daily and the weekly timeframes, just understand your longer term bulls are sitting right here in this green box to potentially continue this monthly trend into the remainder of the year and into 2025. I see no major red flags for this company at all. As of now, the bulls still control everything. I'm just giving you guys a little bit of a potential scenario that could happen if in the event we get something like happened back here. Moving on to NVIDIA right now. NVIDIA, nothing to say, guys. Extremely healthy day on this stock as well. Just continuing its push forward, right? Very, very gorgeous daily uptrend in motion. A lot of space created now above the lows. 119.72. As soon as this move is topped out, keep an eye on that hourly time frame. Look at this gorgeous hourly uptrend. If we lose this and lose the 12 EMA on the hourly, then we'll be looking for daily consolidation to be underway. And then we'll just be looking for a higher low, anything above this level right here, higher low for further trend continuation. Where could we maybe come back into? This previous level of resistance, the yellow line, 127-ish. The 12 EMA is right there as well. So if NVIDIA chooses to pull back a little bit, maybe just be met with some bull support onto a further daily uptrend continuation factor. The weekly is also looking very, very good. Weekly higher low is set and looking to potentially push to new all-time highs. Looking very good. We will do the flip side scenario, guys, to the downside if ever the bulls start losing the daily uptrend. But so far, no indication of that. Extremely healthy. Now on to Tesla. So Tesla slowing a little bit down here today, only up about 0.35%, after being used to about 5, 6, 7% per day. Nice to see them cool everything a little bit off. RSI still extremely overbought. However, on the 4-hour, it's getting less bad. Still a beautiful 4-hour uptrend. And on the hourly, guys, the hourly time frame needs to be our guide, right? Need to watch when will they lose this 12 EMA with a significant hourly downtrend. Only then will you know that larger form daily consolidation is underway. And if they do start daily consolidation, just know anything above 180, just looking for the eventual daily higher low for further trend continuation. Where can we come back into, guys? This green box, I've left it here for a while. 240 all the way down to roughly 230 seems to be a nice area of consolidation for me. Prior big area of congestion all the way back here, guys. You can see roughly, your most important level in recent price action history, and also in confluence rather with this downtrending channel line, which is about a year's worth of a channel line at this point. 12 EMA is also right there. So that would be my likely location if ever Tesla has to pull back in one shot or even two shots daily downtrend of that level. Send us maybe into a little bit more weekly consolidation prior to earnings. This could be a likely area where it stops. I'll remind you, earnings is the 23rd of July. So at this point, I do have Tesla exposure to the upside, so I'm not going to add to it up here. But if we do get a pullback into this location right here, I definitely will be adding for this eventual weekly trend continuation potential, right? Looking very, very decent for a swing trade if we do retest those levels on Tesla down here. Now moving on to Palantir. Palantir breaking above 28, guys. This is very significant because 28 has not been tested since 2020 and 2021. It is one of the bigger levels on the chart right now. They are now breaking above it. The next areas are pretty much 31, and then we have to go the all-time highs at about 38. Palantir looking so strong right now. Daily uptrend clear as day, right? Daily uptrend is very, very nice right now. No red flags whatsoever. That's not even daily higher low because we're pushing new highs every single day. So at this point, guys, right, any pullback at this point going to be looking for a higher low, anything above 2407, looking for the daily higher low for further trend continuation. Where can we pull back? If ever we get rejected from here over the next few days and cannot close above 28, then most likely look down to about 26 to about $25. That is the likely area where the bulls may pull back into. Big previous weekly resistance should be newfound support for those long-term bulls that are looking to make a second attempt at that 28 level. Obviously, there is another opportunity for the bulls to just really break above and then sit on this level, set the daily higher low, and continuation. I'll be looking for one of those two trades, right? I'll be either looking for the breakout, retest of 28 and run, or the pullback into 26.25 and make a second attempt at 28. Here is a little bit of a middle ground trade, right? Not too sure if it's going to break out or break down. That's why I wait for confirmation for one of those two trades. Hopefully that makes sense, but the Palantir bulls are looking excessively strong daily and the weekly, and you guys know where this trade's been coming from, right? It's the monthly trend continuation that we've been talking about now for literally the last 9-10 months on the channel. And that's pretty much everything for our stock list, so hopefully you guys enjoyed that. Now let's take a look at my portfolio for a few updated trades. All right, guys, so taking a look at the portfolio. Today was another very good day, guys. It's been a very good week so far. Monday, we realized about $500 in profits. Yesterday, realized almost $300 in profits. And today, another $250 in profits. All very short-term swing trades, guys, either with long call options, very quick swing trades, or just with the regular short put wheel strategy that we've been using on the channel. So take a look, guys, in terms of the new positions, rather. So in terms of the new positions, guys, I went with some AMD August 16th, 250 calls. They are a ways away, but they are very cheap. Got two of them for about $1.16, and I waited for a little bit of a dip here, guys, right? So we waited for this dip to be happening over the course of the day on AMD, and right around here is when I picked up my calls. Now, obviously, the momentum wasn't that strong throughout the rest of the day, which is why you can see they're pretty much the same. These fluctuated up and down, but I'm really looking for the next move on AMD to bring us up into the 200 range, right? It can fluctuate down or by a little bit more, but really looking for that expansion into 200, maybe prior to earnings or after earnings. And if we do get that, guys, I should be able to make at least a 2x, maybe even 3x on these 250 calls. So that's pretty much the logic behind that one. We did have the AMD calls for October, which were a bit more expensive, guys, and I pretty much closed them. I don't know if you can see the transaction right there. So you remember, I didn't get the best fill on these, and I'm still willing to buy these again if the opportunity does present itself, but I really didn't like my fill, was a little bit late on them. So we picked up these 200 calls for October for $11.10 yesterday, and when they rallied today by about 4%, the premium didn't actually rise that much. You can see right here, I pretty much sold these as close to the top end of the morning move as possible. I didn't get all the way into the 186s, guys, but nonetheless, we did get about 183, 184, right around where they closed, and the value of these options just did not go up that much. Take a look right here. I had to sell them pretty much, these 200s, for only $12.40. So yes, I did make about $130 in one single day of trading them, but just wasn't happy about the performance of the option as a whole. I guess a lot of the volatility was baked in yesterday, and since we got a little bit of a volatility crush today, even though AMD had another beautiful day, just the option wasn't performing that well. Might need to pick this one up on a little bit of a dip if we do get it. So I got out of this one and replaced it with a bit more cheaper, more speculative bets, but all in all, happy with the way AMD's been going so far. I know it was a little bit of a small trade. I could have held a little bit more, but I'm looking to buy back into that one, preferably under $10, $9 perhaps, right? So moving on, guys, all the rest that don't have a blue dot, nothing else has changed. So I've still maintained a bunch of positions right here. The only two ones that I've added here, guys, is CLH. So you can see right here, we have a CLH almost leap call for March 2021, the $40. The premium on them was not too bad, only about $22.61 CLH. So that gives me a break even of roughly, 62. And the share price from 62 is not so far off, right? That's only an increase of about 8% on CLH, and CLH is known to move. The only reason that I took this one, guys, is the massive recovery that we got since yesterday. Potentially the bulls are looking up to change the shorter term timeframes in their favor. You can see we're pushing above the moving averages, and we might be making an attempt even on the 4-hour to get somewhat of a daily bounce off of these lows going. I've been looking for an entry on CLH in this lower level, so I figured I should take it, right? Potentially due for a little bit of a rally, and if I can get, guys, I'm not willing to hold this call all the way through March, but if we can really rally back into maybe the mid to high 60s, I may be looking to close this option at a very juicy profit. It's pretty much a share replacement strategy, right? Rather than buying 100 shares of CLH at $56 for $5,700, I figured I should just buy an in the money call option, right? Usually around the 80 delta mark, and you get in for less than half the cost, but the dollar up moves the same, right? If CLH goes up $5-6 per share, this option should also go up $5-6 per share roughly. That's why I go with the in the money 80 deltas for any time that I do leaps. This one isn't a true leap, but you guys get the point. It's a longer dated option, right? I also went with a shorter dated option, which I tried earlier on in the month of June. When we were first coming down here, you guys might remember, I tried to buy the dip here, and unfortunately it just kept dipping and didn't really give us everything. So this one expires over the course of this week, these $75 calls. We paid $230 for them, and we lost all $230, right? So I'm trying it again on CLH, 75 calls, this time a little bit further out for the month of September, paid roughly the same, $2.18 in premium, not that high, and same thing applies if CLH goes to the mid 60 mark. This one should be at least worth $3.50, maybe even $4. So just looking to make a quick 2x if I can recapture a little bit of the money lost there, plus this call option too, should be a decent little trade on CLH for not that much capital, right? Moving on, guys, pretty much everything else has stayed the same. We did open some short-term swing trades here on Delta Airlines. So Delta Airlines have earnings tomorrow before the open, so should be quite interesting on their day. So we wrote the 42 puts, which is roughly about 10% away. The expected move is about 7%. This one is over 10% away at the 42s. The logic behind this one is just because Delta, that level for them, the 42 mark, if you want me to put a little bit of a line right there. So 42 is right about here, right? So you can see it, big prior resistance should be current support, and the 200-day moving average is right there as well. Would not be surprised if Delta Airlines, even if they do pull back there, should be a decent little area for them to be able to hold. You can see that even best on the monthly chart right there. But it's the summertime for them, right? This is pretty much going to be their spring quarter, so they should be giving fairly good guidance. Travel for consumers has still been relatively strong, so we'll see how this one goes. We got about 33 cents for them. Would not buying being assigned. Obviously, earnings are risky, not financial advice. And we went the other direction as well. We went with the next week $52 call. So these are both for next week, trying to bring a lot of premium forward on those puts. If Delta Airlines has good earnings or stays flat, should be able to cover all of this by tomorrow morning or pretty much Friday for, 80-90% profit. So bringing some premium forward from next week to this week. And then on the $52 calls, Very simple, guys. Paid about 48 cents for them. Very, very simple, right? We were credited 33 cents. We paid 48 cents for these. The net cost of having these two options, guys, is about $15. So I'll take the risk, right? For only $15. We'll see what happens to the upside. Obviously, if Delta, does not have a good earnings and stays flat or goes roughly down, I'm going to have to close these calls most likely at a loss, but they probably won't be a full loss. Probably some recapture value, maybe 10, 15, 20 bucks there, right? So it won't probably be a full loss. We'll see how this one goes tomorrow, though. All the rest of the swing trades are still intact, especially the ones for the week, right? We still have some short puts here on Fortinet. I did close the ones on Square. They were pretty much at a decent little profit, right? So we wrote the ones on Square earlier on in the week. We wrote these 62 puts for about 39 cents. We closed them today at about 20 cents. So 50% profit midway through the week. Just chose to reallocate the capital to some Delta Airlines right here. We still have the Fortinet 59s down here as well. We did open a swing trade on Intuit also throughout the day. So Intuit has been the ones that I really like swing trading, such a solid company. And today had a little bit of a dip coming down. It was down 4% at one day, which is a rare occasion for Intuit, coming into the support area that I've been looking to play here, guys. It didn't quite get there. That's why I only threw 3 shares at it, willing to DCA a bit more if it came down into this location right here. It's just off some news that they were laying off 1,800 people from one division of a company and that they're potentially going to rehire other people for the AI division of their company. So they're cutting down a little bit of their workforce. That should be good for margin improvement, but since they're rehiring people down the line for AI, well, it's just going to be a question of just, the same salaries in different places, right? So a bit of the news event, in my opinion, was a bit of an overreaction. That's why I took it. So happy with that. Now we're already up a tiny little bit, but just goes to show, guys, I can go so much heavier on these. The purpose of most of all these plays is just to show you that even with small amounts of money, you can still make very decent trades on very solid companies, and just go for the percentage, guys. The dollar amount does not matter. Never focus, never chase dollars. Look for percentage. ROI per day should be the only metric that you are concerned about. The dollars will come as the account grows. I promise you, you should always be focusing on ROI per day. So that's a quick little tidbit on that. I still have a number of some put credit spreads still open, right? MasterCard's still open, even though they're down in the dumps. I have 2 put credit spreads on Meta, 490s and the 485s, and then the 505s and the 500s, both for August the 2nd. Now, this is the week of earnings. I should have probably done 1 week before or 1 week after. The premium on these will probably stay relatively high all throughout earnings, so I doubt that I'll be able to close them, even though I am up, 35% on one. It's just not pushing that extra little bit, even though Meta has run significantly since those levels, right? So a little bit of a mistake on my part, but I still like these positions, no problem at all. Still have the Nike call still in that. Not going to add to it just yet. We have the Pepsi bull put credit spread leading into earnings. If ever this one goes below 157.5 tomorrow, so what's going to happen, guys, is rather than probably closing the put credit spread, if we gap down to like 155 because earnings are terrible, what I'll probably do is I'll probably close this in 2 legs. I'll probably close the long 157.5 puts for a profit, and I'll probably let myself be assigned the 160s, right? So we're not going to lose too much money, but I do have the buying power to get assigned 100 shares of Pepsi at 160, and I really wouldn't be opposed to it, guys, because it's in the lower range that I'm really looking for Pepsi at. So if we come down here, I'll probably close the puts for a gain. Keep in mind, the damage is only at $250, right? I'm covered. So I'll only really lose $250 on this spread potentially, and that's about it. Other than that, guys, we did open some covered calls for SoFi today, $6.50 calls. Could have probably waited a little bit more. Went 2 weeks out on these and got, $240 for them. So that's about over 3% in premium for 2 weeks of trading. We will see what happens for those. Those are from my SoFi shares assigned earlier at 7. So continuing down the long list of trades right here, we do have these SoFi $4 calls for about March 21, 2025. So these still have about 8-9 months worth of time on them. Still a very decent amount of time. And we only paid about $2.96 above the $4 strike. So our all-in price is pretty much $6.96, right above where we are right now. As a matter of fact, that is only about $4.36 off the current share price. That is why whenever I do leaps, even though these aren't true leaps because they don't have about 12 months of time on them, they are longer duration calls. Whenever I'm going 6+ months, I always do in the money around 80 delta, just because they perform exactly like shares and you pay a lot less than the actual shares for them. So once again, a share replacement strategy using the leverage built into options. So if ever SoFi runs in the $8, $8.50, $9 range, maybe we make a little bit of a 2x play on these as well. Have only 2 contracts, cost me about $600. Now moving on, guys, the Square covered calls, we've had the Square covered calls on for a while. We wrote them earlier on in the week. Let's see right here. You'll see, I think we wrote them last Friday. I'm not too sure if they'll still be in the list. Yeah, they're not still in the list. But if you go back to Monday's video, you'll see them. They had these Square 66 calls for this Friday for $1.16. We were able to close these today for about 25 cents, so realizing pretty much over 80% profit at this point. And we were just looking for when Square was down in the morning here, guys, this is when I closed the Square options, the Square covered calls down here, because they were pretty much almost worthless. And then when Square had a little bit of a rally into the end of the day right here, I opened one strike higher, going with the 67s. My assignment is about $68 on these shares right here. But after writing covered call premium for so long now, about a month and a half, our average cost on Square is below $64. It's sitting at about $63.40 right now, as a matter of fact. So looking to get a bit more, we went with the $67 calls. That is $1 above the 66s that we had just earlier today. So at least if ever it ends above 67 this week, we get an extra $100 in share premium. Not looking to get too much premium on the contract though, only got about 16 cents for them. So not too much at all. Just looking to increase our potential strike price if ever we get called away. And then we went with the Teslas, guys. We played Tesla a bunch this week. You may remember we started off the week with the Tesla 235s for this Friday, or rather next Friday. We got about $3 and 20 cents for those earlier. You can, as a matter of fact, they should be still here. So Tesla, we went with the where is it? Too much Tesla right here. Tesla July 19th, 235s for $3.15. We closed them the very following day here, guys, for $1.60, 50% profit. Not going to hold them the rest of the way. And then we opened another Tesla trade yesterday that I didn't show you guys, but we went with the Tesla. These are the 242.5 puts. I don't know why they're not showing up, but we went with the Tesla 242.5 puts. Oh, they're right down here for about 91 cents yesterday, right? So $91 for those. We closed them today and rolled up a strike again. So we closed these for 50% profit, and now we went with the 250. So I'm just trailing Tesla's price to the upside while still giving myself a 4 or 5% margin of error to the downside for the 2 remaining days of trading. So we'll see what happens with these last Tesla 250s. Wouldn't be opposed to being assigned at Tesla at 250, which is why I wrote them. We got 94 cents for those. So we'll see. It's been a very good week on Tesla between short puts and long calls. So looking to continue that going. And that's pretty much everything, guys, right? So I do have a lot of trades. You'll notice obviously that I've really added to the amount of trades that I've been doing over the last 2-3 months. That's not just because we're in a bull market, guys, but I promised you that I would show you all the strategies that I have in my tool belt and which ones to use when, right? So now you guys can see I've been using long call options, both short duration and long duration ones. I've been using more put credit spreads for people with small accounts, debit spreads as well. We've also been doing small swing trades with only flat shares, just to show you guys that you really don't need a lot of money in order to, outperform. The main focus, guys, the main focus needs to always be on the ROI per day. Never focus on the dollar amount. Always focus on the amount of ROI per day. It's the most important factor for a reason. So hopefully I've added a ton of positions. Usually at any given point, if I'm only running the wheel strategy and I'm keeping it really boring and simple, which it should be, I'm only ever running 5-6 positions. But now, because, we're in a very good market right now, and I want to show you guys the number of different strategies you can use and when to employ them, that's why I have so many open positions right now as a whole. But all in all, guys, very decent performance for the week. I'm pretty much happy with the way it went. Now, that's pretty much everything for our positions. Let's get into some swing trades, shall we? So some juicy little swing trades coming up, guys. We're going to go through these quickly because you've pretty much all seen them before, right? Berkshire, such a classic name, guys. Berkshire in the lower, anything below 410, just looking for the eventual trend expansion, right? It's been stuck in a range pretty much since the month of February. Bullish lean, obviously, because of the markets, expecting some follow through on Berkshire. Could be a juicy little swing trade. As a matter of fact, I'm in this one myself. Second one, guys, Vici. Vici, what more can you ask for such a juicy company? Usually a lot of REITs, guys, right? A lot of REITs just do absolutely nothing and maybe even trend down over time, even though they pay a high dividend. This one is holding its share price very decently. One of my favorite REITs in the market. I continue to say it. And they also pay a 6% dividend. So the whole time that we're waiting for that juicy share appreciation that will indeed come, at least we get a 6% dividend. So I'm really not opposed to continue building a position in Vici at the $27, $26 level. Now, a few more, guys. These need no introductions. We've been playing them now for about 2 weeks at this point. Visa and MasterCard, right? Visa, monthly trend, just looking for a monthly higher low, tagging the 12-month EMA. If you're not buying Visa and MasterCard in this environment after a 3-month period of consolidation, I don't know when you're ever going to buy them, right? These are the times we need to be buying these things in bull markets. 3 months worth of pullback, beautiful rally. This is COVID, we won't count it. But in a bull market, when you get 2 months of pullback, on these names, guys, we have to take those trades each and every time, especially if this is one of your most high conviction companies in the market. It is for me. You guys can obviously do what you want, but I have to take these trades every single time. MasterCard, the exact same thing, coming into our area of support, 3-4 months worth of consolidation at this point, looking for the monthly higher low for a very beautiful company, guys. This is exactly where I need to be taking these trades. Another one, McDonald's now. Coming down into one of its larger areas of support right here. Yes, it did dip down there a little bit more in 2022, but you guys know how bad 2022 was for the markets. At this point in time, McDonald's is below its 200-day moving average, and McDonald's, other than this COVID right here, hasn't lost a 200-day moving average for more than just a week or two at a time since 2015. It's been almost 10 years at this point, right? Fundamentals of the company are still good, just a little bit of people worried about consumer discretionary income going down a little bit, but for a long-term position start in McDonald's, I see no red flags right here. Gorgeous monthly level of support, tagging the monthly 50 EMA as well on McDonald's. Could be a great swing trade opportunity. And the stop loss, guys, is super low, right? At the low of this week, right? 244. We're risking what? $5-6 per share. And our upside potential for the weekly trend recapture is all the way up at 276. Looking pretty good risk reward wise, in my opinion. Another one, Louis Vuitton getting caught up in government headlines about the new leftist government of France and its potential impact on companies being able to generate a profit. Guys, I have no problem with Louis Vuitton at these levels. It's a conglomerate, an international, worldwide conglomerate with over 80 different luxury brands in its, in its portfolio of assets, essentially, right? So whatever the French government does, I really don't think it's going to affect Louis Vuitton stock that much. If anything, they can even move their headquarters to a more tax favorable location like Ireland or something like that, like all of big tech does anyways, right? Louis Vuitton, super juicy level, down in the mid 150s. Valuation of the company is super good and literally just looking for the eventual monthly trend resumption once we get through this period of consolidation. I really love this stock, guys. One of the most strong stocks in the entire market right now. If we can grab it down here at the 50-day moving average on the monthly, around the 145, 143, you can see how often Louis Vuitton has lost this in the last 8 to 10 years of trading. The hint is not really ever, right? Except for, obviously, the pandemic drawdown. Now, another one, guys, Pepsi. Pepsi has earnings tomorrow, so I'll be waiting to see their earnings. But if ever we get a drawdown into the lower $150 region, such a strong level of support for a company that just continues to expand EPS. Obviously, consumer discretionary spending has been a bit worrisome for a lot of these consumer discretionary stocks, but Pepsi is a much more solid company than a Starbucks or a Nike. Very, very strong company, to say the least. So if they do come down here, swing trade opportunity, guys. The stop loss, if we come down to the lower 150s, right? Where's the stop loss? 154, 153, and we're charting all this upside up back into the 170s, 180s. Risk reward is beautiful if we do dip down to there. Another one, guys, Intuit. You can see, guys, I've only been showing you quality companies in this entire swing trade list, not going for small cap growth stocks, not going for unprofitable businesses. Only solid companies is the name of the game. Intuit coming down here about 4% on the day, right? Coming into my swing trade location right here. If we dip down further, 620 down to 600, I see no reason that this can't be a juicy buying opportunity. Looking to set the weekly higher lows for continued trend expansion for Intuit. Intuit, one of the more solid companies in the entire market, guys, for a reason, right? They just continuously go up, continuously push EPS and free cash flow higher. Now, moving on, guys, I hinted at this one earlier. AbbVie, one of my favorite healthcare names in the game right now. Same thing, looking for that weekly trend recapture by the bulls, and the stop loss can be small. We're going for this weekly trend. This is supposed to be the weekly higher low, so in the event that we're wrong, the stop loss goes below here, 163. What are we risking? $5 to the downside. Where are we targeting to the upside, guys? Well, first level to the upside, guys, is going to be 173. So it's about a 1-to-1 risk reward right now. But the major thing that we're looking for is we're looking for monthly trend continuation, right? So I'll probably be holding this one up until 182. Risk reward, very favorable in my opinion for a longer duration swing trade on one of your strongest names in the entire healthcare market as a whole, right? Moving on, CRM, Salesforce needs no introduction, right? Salesforce trying for the exact same trade setup. Juicy daily uptrend right now. Looking for pretty much some weekly trend consolidation as well. So what are they looking for, guys, on the weekly? Looking for the weekly higher low for further trend continuation. Where are we targeting, guys? Lower 245, 242. If we come back into it and tap it, we briefly touched it today. But if we retest this location, I see no reason not to take this trade. Stop loss can be super tight. 239. And to the upside, guys, we're obviously targeting 265, first location right there, and the next location on the weekly, 287. So risk reward, if we're trying to pinpoint an entry right here, risk reward for this type of continuation is quite good in my humble opinion. And the last one I'm looking at, guys, all the time every week is Uber. Uber's done a great job consolidating on the daily at these lower levels right here. Stop loss can be super tight, pretty much below 66.62. If we take an entry from here, $3 worth of stop loss, looking for the weekly trend change, and we'll be targeting this previous weekly high right here, 76, and then the all-time high at about 83. So $3 worth of risk for potentially $10+ worth of upside, right? Looking very, very strong on Uber. And we're just once again looking for that monthly trend continuation. So you can see the parallel between all of these trades. They're either in long-term monthly ranges or monthly uptrends, and very, very solid, profitable companies to say the least. That's pretty much everything that I had for you guys today. Hopefully you appreciated the longer form video with more emphasis on trades. If you did, consider dropping a like on the video. Would really appreciate it for the growth of the channel. Second, if you haven't subscribed to the channel yet, consider doing so. Would love to see you back. We do these videos every Monday to Friday after the close. And then lastly, guys, if you have any questions at all, as usual, please leave me a comment in the comment section. Either if you want me to look at a stock, technical analysis, an options play, macro discussion, anything you guys want, leave it down below and I'll get back to you within the first 24 hours. Take care, guys. Been a pleasure as always. I'll see you tomorrow after the close. Happy trading and peace.